right, when you pay sales tax to the Department of Revenue, there is a very specific process to go through in QuickBooks to make sure that you always pay the right amount. And I want to go through that process with you. What we talked about first was setting up sales tax for customers, and I'm just going to briefly go over that again. When you have a customer and you go into that customer, you set up the sales tax, whether they are a taxable or non-taxable customer, and you put in their sales tax by location. Now, to do that, you had to have set up already in the item list a sales tax item down below, right? So down at the bottom of this report, you have different sales tax codes, or out of state if they're not subject to your state sales tax. Okay, so you set up all the sales tax codes. You go into the customers and you identify whether they are by default a taxable or non-taxable customer and the sales tax code that is applicable to them. And then you go in and invoice a customer, and at the time that you invoice, you have items that are either taxable or non-taxable. An inventory item, as a for instance, when you go into this inventory item, it is by default a taxable item unless it is sold to a customer who is a non-taxable customer. Okay, so you go into, when you create all your inventory parts, you need to identify that they are taxable. Where most inventory will be taxable, the case is that most services will not be taxable, and that's not always the case. But you know, generally speaking, that would work, especially if it's a 100% service activity and not a combination of services and products together, which is taxable for the Department of Revenue in the state of Washington. Okay, so you set all of that precursor up, and now it's time for however frequently you file. When we go to file your sales tax report, when we go to preferences and we go to sales tax, we want to set up that yes, we charge sales tax on the front end. That's going to allow us to do all that setup that we just talked about. And then you can add sales tax items here if you choose, or you can go in the item list down below there and create sales tax items. You can identify these two codes as, you know, simply as taxable or non-taxable, and then you want to check the box that says that it is that when is sales tax owed, it is upon receipt of payment. If you are under a $10 million company, I believe, then you pay on the cash basis. So you could invoice to crazy, but until you get payment, you are not subject to taxes. And then you can identify how frequently you have to file your tax returns. Okay, so once you set those preferences, if you go into vendors, sales tax, and look at a sales tax liability report for the specified period of when you're going to pay, like if we're going to pay for the month of November, you'll see that there are some invoices that have been put in there. Some of them are not taxable, some of them are taxable. The rate for that area and the sales tax collected for that area, it shows, right? So when this is the detail by which you'll go on to the Department of Revenue website and input the information to record your sales tax payable. After you create this report, though, you frequently run into an issue of how do you physically record the payroll tax payment in QuickBooks. And there are some inherent problems in going through this process. So when you go to the window that says Pay Sales Tax, you notice that there's two sales tax codes here, and although those are negative numbers, we're going to use them anyway. That when you pay, it would be beautiful to get a refund from them, but normally you know, right? At any rate, when you record this sales tax liability, or when you check these boxes to pay these sales tax, if the sales tax owing were the amount that's recorded here, and that's how much you're writing the check for, well, that's great. But when you go on to your Department of Revenue website and you enter in these figures for total sales and taxable sales for retail sales tax, and you enter in the B&O tax information for the receipt of B&O taxes, this is not going to match what you would write as a check to Department of Revenue. And there's two reasons why. One reason is that your sales tax as calculated on these sales, which would be this, the taxable sales, does not compute correctly in QuickBooks. That's a problem you have to fix in QuickBooks, because if you put in a rate of 7.5, but the real rate is actually 7.6%, then you need to fix that and make an adjustment for it. But so that's one reason your sales tax rates don't match. The second reason is because the amount that you have here does not ever include the B&O, business and occupation tax, which is a tax on gross revenue, which is not charged to the customer, but which you must pay to Department of Revenue. So you can go and make a sales tax adjustment as of the date of when you're going to pay the sales tax. You would make it to the agency that you're going to pay it to, and the adjustment account would be your state taxes expense, like maybe called B&O tax expense. And you would increase your sales tax by the amount of your B&O tax. Maybe it's $234, okay? And you'd call that B&O tax, right? So that way you've got a note, because this is going to create a journal entry in QuickBooks, number one. Number two, it's going to put a line item down here, right below the rest of the sales tax items, okay? But this is one part of it. You've done your excise taxes online, and you see that you have $234 of excise tax plus the sales tax, which if it was, $628.73. So it's like 800 and something total, right? Okay, but the problem is when you put this in here, it doesn't match. It doesn't tie out to the correct amount, and you're like, why doesn't it? Well, if it is not going to match, you can actually make an adjustment right here to the amount that will ultimately produce the accurate check for you. So if we made this the B&O taxes, just to make this work, if we made it for $700, then we would have if we said okay, and we check those with these other two, we would have an amount of 73.27. If our actual bill going to Department of Revenue on that day was 73.27, we would be accurate. This is going under the expense account, B&O tax expense though. So how is it that that works? The way it works is if you increase the amount of expense, you are actually decreasing the amount of revenue, and your financial statement ties out. It's a complex process, but that's the idea. You clearly collected not quite enough sales tax, and so you are making the adjustment by making a one-time adjustment to that we just made in this right here. And when we click on the 3, now we have an accurate payment that pays the correct amount. So when we then say to be printed, and then we go into our check register and we look for that check, it's going to appear right there, Board of Equalization, and we can print that out. Or if we're actually at that point, we look at that check and we're like, okay, here's the payment of our taxes plus the B&O tax, and it equals the amount that we wrote a check for. We can actually say that it was an EFTPS because we make an automatic payment online for the payment of the taxes, and we can put the date when it is paid properly and save and close, and that completes the process of paying your sales taxes. So we will wrap that up.